Namaskar and a very good evening to one and all. I, CA Deepak Chopra, Chairman Direct Tax Committee, KSCAA, welcome you all to today's insightful session on reassessment provisions and the Income Tax Act, a topic that continues to spark discussions across the tax fraternity. I am honored to introduce our distinguished speaker, Senior Advocate and Chartered Accountant, Shri Chythanya KK sir. Welcome, sir.
Thank you.
Sir is known across the country as one of the finest minds in taxation. Sir brings over 3 decades of unparalleled expertise as both a chartered accountant and an advocate. His journey in tax law includes 14 years of specialization in taxation as a CA and 17 years of practice as an advocate, making appearances in multiple high courts and the Supreme Court. Sir has been designated as a senior advocate by the Karnataka High Court in December 2021. Sir's journey is a rare blend of academic excellence and professional achievements. His academic achievements include 8th rank in the state of Karnataka in 2nd PUC, first rank in Mysore University BCom, 47th All India rank CA Intermediate, 15th All India rank CA Final. Sir has made significant contributions as an educator and a thought leader. He has lectured at prestigious institutions like IIM, ICI, and various direct tax forums, sharing his insights on complex tax issues with students, professionals, and policymakers alike. His contributions extend to co-authoring books on tax holiday under Section 10A, 10B, decoding Section 5, mystics of MLI brought to life. Sir is also credited with the task of co-editing the 13th edition of monumental Sampath Iyengar commentary. Sir has contributed numerous articles to prominent journals like ITR, Chartered Accountant, Taxman, and many others. Beyond these accomplishments, he has played a vital role in shaping tax policy. He served as a member of ICI study group on tax transfer pricing, deposed before Justice AP Shah Committee on MAT levies for foreign institutional investors, and represented India as a country reporter for IFA Seoul Congress on withholding tax. We are privileged to have you with us today, sir, to decode the recent judicial developments and controversies on reassessment provisions. With this very brief introduction, we welcome you once again, sir, and we pass on the proceedings to you, sir.
Thank you, Deepak. Thanks a lot. I would sincerely express my gratitude to KSCA to have given this opportunity to go through the decision of Supreme Court in Raju Bansal and also go through these provisions in all its three regimes and understand, or at least attempted to understand whatever I could. And I'm very glad to start today's discussion. Though Deepak initially asked me when he invited me to do a presentation, the focus is on the decision of Supreme Court in Raju Bansal. Then, the flyer suggested I will have to generally deal with some aspects of the reassessment. So I have chosen to discuss the limitation part of reassessment, because as you would agree, the reassessment, is too broad a topic to be discussed in a short span of 1.5 hours. And we lost about good 5-10 minutes because my video appears, not cooperating. So you'll have to only hear my audio. And so with this, I will take you on to the topic right away. Just give me a minute as I go to the presentation. So that I will walk through this slide. Are you able to see this slide, Deepak? No, right?
I see the initial slides, sir, but the slides are
Initial
not
slide.
changing.
Okay. I'm not able to see it. Just give me a minute. Maybe I'll have to have gone in for Mhm. Yes. Are you able to see the slides moving?
Yes, sir, they are moving now, sir.
Yeah. So there are three types of limitations which we'll have to look at here. The limitation with respect to issue of notice under section 149, then limitation in terms of section 150. These two are for issue of notices. Then we'll have a separate limitation under 153 for completing the assessment, reassessment, or recomputation under section 147. So you could see two types of limitations here, one for issue of notice under 149 or 150 as the case may be. The other one for completing the assessment post issue of a valid notice. So we will have to be looking at these three aspects depending on how much time would we have. So we'll start off with issue of notice under 149. This is the
Sir, we lost your audio, sir. Hello? 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 Uh, there must this being some technical issue, but we should have sir in a minute's time back.
I'm sorry about it, Deepak. Suddenly it went off. Are you able to hear me
We
now?
can hear you, sir. We can hear you, sir.
Yeah. Just give me a minute. I'll share the screen. Sharing is not turned on. Can
Uh,
you ask the host to share? It's turned on now. Yes. Sorry about it. Are you able to hear me? Can you see this slide as well?
Yes. Yes, we can, sir.
Yeah. Yeah. Extremely sorry about it. It went off. I do not know why. Maybe my network or whatever. Right. Uh, so I was mentioning about the limitation of time, which is extremely critical for the reason that the Supreme Court from decades has held that the limitation goes to the root of it, and the question of alternate remedy, etc., would not, like alternate remedy of appeal, etc., would not bar an assessee who is visited with the notice to challenge the notice in a writ, particularly when it is time barred. So it goes to the root of the matter. So the topic which the KC has chosen in respect of Rajiv Bansal implicitly, but more explicitly, the time limit would be very, very relevant. So this is the reason why I thought I would just discuss with the time limit. Now, if you would see the regime change till 31st March 2021, we had a regime on reassessment, whereby since 1987, we had a fairly uh, consistent regime which dealt with the limitation under 149 as well as by way of first proviso to 147. Apart from the time limit of 4 and 6 years you've had, you also had a separate time limit under first proviso to 147, whereby if you were subjected to a prior assessment under 143.3 or 147 prior assessment, and if you have not been guilty of failure to make full and true disclosure, no assessment could be made after the expiry of 4 years from the end of the relevant assessment year. This has been now dispensed with. So you don't have the benefit of first proviso now. There was another proviso earlier which took away the benefit of the first proviso if you have had an income from an asset located outside India. So because the first proviso benefit itself is removed, second proviso became redundant, and that benefit also is not applicable. Likewise, under the old regime, you have had an explanation which clarified that mere production of books of account and other evidence from which the material evidence could be discovered by the assessing officer with due diligence, that itself would not necessarily amount to disclosure. This also was relating to the first proviso. So now you will notice that the additional protection which was given as part of section 147 itself is now no more there after 1/4/2021. Now, having discussed that part where the additional protection of 147 is no more available, now we look at section 149. And 149 will have to be understood by dividing this into 3 regimes. The first regime is up to 31st March of 2021. Second regime is from 1st of April 2021 to 31/8 of 2024. We had second regime. Third regime and the current regime is from 1/9/2024, introduced by the Finance Act of 2024. So these 3 regimes will have to be very clearly understood. So insofar as first regime is concerned, we were fairly conversant. As I've said earlier, there were 2-fold protection that was available to us. One is by way of first proviso to 147, where if you made full and true disclosure, if you have suffered the previous assessment, then no assessment could be made 4 years from the end of the relevant assessment year. Apart from that, you had section 149, which is a fairly simpler provision, which had 3 types of time periods, where the escaped income did not exceed 1 lakh, 4 years, where it exceeded 1 lakh, 6 years, where you've had an income from an asset located outside India, 16 years. And if you are to be assessed as an agent of a non-resident, 6 years. So like this, you have had, fairly straightforward, simpler time limits under 149. That is the first regime. Second regime brought in a material change. So I would just very quickly take you through the comparison between the first regime and the second regime. See, first regime, it said the default period is 4 years. But from 1/4/2021 till 31/8/2024, the default period is 3 years. Then, in the first regime, you had up to 6 years if the income had escaped income exceeded 1 lakh. Whereas in the second regime, it would go up to 10 years from the end of the relevant assessment year. And this is based on a very stringent condition that the assessing officer has in his possession books of account, documents, and evidence revealing that income chargeable to tax, which is represented in the form of, look at this, an asset, initially started off with an asset by Finance Act of 2021. Finance Act of 2022 added 2 more elements with effect from 1/4/2022, expenditure in respect of any transaction on relation to an event or occasion, and an entry or entries in the books of account. So the income chargeable to tax should be represented in the form of one or more of these, and such income has escaped assessment, and such income that has escaped assessment amounts to or is likely to amount to 50 lakh or more for the relevant assessment year. This was the provision. So what was 6 years became 10 years, but what was 6 years, which merely depended on the quantum of escaped income, it became 10 years, and that did not depend only on quantum of escaped income, which is about 50 lakh plus. And also, it required an additional condition of assessing officer having to be in possession of books of account, evidence, documents, which should reveal that the escaped income is represented in the form, one or more of these forms. It's a very, very stringent condition. Merely saying, escaped income has exceeded 50 lakh would not have permitted department to go beyond 3 years. So it came with the twin condition. This aspect, anyway, I will go through little in greater detail a little later. And then, this 10 years was considered little too harsh for the past years. So they brought in a first proviso to the second regime to say that, look, for the assessment year 21-22 and earlier assessment years, we will have this wherever 10 years would apply, we will get it truncated to only 6 years. So they said, if at the time when you issue notice, you could not have issued notice applying the old law, and the then existing 149, then existing 153A, 153C, then you can't issue notice now, which essentially applied the earlier 6 years into present 10 years in respect of assessment years up to 21-22 for all the past assessment years, including up to 21-22, wherever they would issue notice now under the new law, that is second regime, they would not have 10 years, they will in effect have only 6 years. Then there were certain other provisions like provisos to 149, which I would take you through a little in greater detail a little later, which were not existing in the first regime. I'm only now drawing a comparison between the first regime and the second regime. I'm yet to take you to the third regime, which I'll take you later. Third regime is the current regime, post 1/9/2024. Now, Finance Act of 2022 brought in one more provision called subsection 1A, where they realized that keeping a limit of 50 lakh for each year would enable certain assessees who would have had an undisclosed income represented in the form of an asset exceeding threshold, that is 50 lakh. So let's say 1.2 crores. But I've made that investment in 3 different years. So I've made unexplained investment in 3 years. Each year, 40 lakhs, 40 lakhs, 40 lakhs. So strictly coming under 149(1)(b), I would have escaped reassessment. But that means beyond 3 years, they could not have troubled me because each year is required to exceed 50 lakh on a standalone basis. So they realized it after a year and brought in subsection 1A to say that, look, if you have invested in an asset in more than 1 year, but the value thereof representing undisclosed income overall would exceed 50 lakh, but may not exceed 50 lakh with reference to each of these years, then department is permitted to issue reassessment notice in respect to each of these years within 10 years' time. So basically, they made it essentially look in the aggregate, if it were to exceed 50 lakh, each of these years you could be troubled, is how they brought in this amendment in terms of 149 1A. With this is the broad comparison between the first regime and the second regime. Now, I will take you little in greater detail insofar as second regime is concerned. Because Rajiv Bansal's decision, which I'm going to discuss in greater detail a little later, would essentially hinge on what was the old regime, then we had TOLA, then we have the second regime coming in, how TOLA managed itself to interfere with the application of time limits under old regime and the time limits under new regime. See, one thing you will have to understand, that the provision of 149 being procedural in nature, it would not apply assessment year wise. It is not a charging section. It's a procedural section. It would apply from the time when it is enacted to all the pending proceedings as well, all the past assessment years as well. So therefore, if the department is issuing notice up to 31st March of 2021, then all the notices issued up to 31st March of 2021 would be covered by first regime. That was the law that was prevalent up to 31st March of 2021. Now, moving to second regime, all the notices issued by the department on or after 1st of April of 2021, although it may relate to the prior assessment years, it could be 13-14, 14-15, 15-16, whatever. As long as the notice is issued on or after 1/4/2021, it has to be under the second regime, although it may relate to the prior assessment years. Now, the second regime, as I've said earlier, provided for a default 3 years period. That means it drastically cut down the time limit 3 years from the end of the relevant assessment year. For example, assessment year 15-16, 3 years would end on 31st March of 2019. You can't be issuing notice for 15-16 after 1/4/2021. In the default regime under 149 1A. So that's why the language is saying that if 3 years have elapsed from the end of the relevant assessment year, unless the case falls under clause B. Now, coming to clause B, as I've said earlier, 3 years, but not more than 10 years. So they could go up to 10 years, provided, as I've said earlier, this additional condition, twin-fold condition. One is escaped income should be 50 lakh or more, and it should be represented in the form of either asset or an expenditure or an entry or entries in the books of account. Then only they could go up to 10 years. Then, as I've said earlier, there is a proviso which provided a protection for assessment years 21, 22 and earlier assessment years, where this 10 years would not apply, rather only 6 years would apply. So they barred the retrospective operation of extended 10 years period. That is how the protection is given in terms of assessment years 21, 22 and earlier assessment years. Then I will then take you to in greater detail. Now look at, this is how the second regime looks like. The default regime 3 years, and should the conditions be satisfied, twin-fold conditions be satisfied, 10 years. Then we will now examine between the old regime and the new regime, how do we go about it? Let us say A notice is to be issued in the new regime on or after 1/4/2021. What should the assessing officer do? He should see first, oh, it's a past assessment year. Is it barred by law previously existing as of 1/4/2021 or not? This is the first question he should ask himself. Because law has undergone a change. Law has undergone a change as of 1/4/2021. So on 1/4/2021, would it have been possible for him to make a reassessment and issue a notice under 149, 148 under old law? If so, then he should apply new law. If not, he should drop the proceeding. I'll explain again. See, this is a fine legal principle coming from S.S. Gadgil and K.M. Sharma's cases. Whenever law changes, here in this case, from the first regime to second regime, the law changed on 1st of April 2021. So this principle is extremely important for you to apply whenever the law changes. I'm just giving this example. Let us say I have to issue a notice for 1415. Now, 1415 on 1/4/2021, could I have issued notice or not? See, 1415 will have, say, 6 years time limit. So 6 years for 1415 would end on 31st March of 2021. So it lapsed on 31st March of 2021. On 1/4/2021, it did not survive. So you don't have to do anything. You just can't issue reassessment notice. You don't bring in TOLA for a while. I'm just explaining without the TOLA. Now take 1516, for example. 1516, under old 149 1B, how much time did you have? 6 years you had. Meaning it ended on 31st March of 2022. Now you see whether on the date of change of law, that is 1/4/2021, was the proceeding for 1516 surviving or not on the old law. If law had not changed, it would be surviving as of 1/4/2021, because the last date is up to 31st March of 2022. Because the law is surviving, then what you have to do? You apply the new law. When you apply the new law, it will be only 3 years. Now for 1516, 3 years will end on 31st March of 2019. So you're barred from proceeding, though under the old law, you're permitted to do it. So this is how you will have to have the convergence of old law and new law. At the cost of repetition, let me tell you, you apply the old law to see whether on the date of change of law, proceeding under old law is still surviving. If it is not surviving, you can't do anything. If it is surviving, you can do something, but not under old law. Then you'll have to apply the new law and apply the new limitation. This is the fine principle that needs to be applied. Now, let me extend this principle to a little, like a more complex situation. See, 149 1B, as I've said earlier, provided twin-fold condition. One is 50 lakh plus. Two, the evidence revealing that the income which is escaping assessment is represented in the form of an asset. This was the law brought in by 1/4/2021. Now, from 1/4/2022 onwards, they've expanded it. Apart from asset, they've brought in entry and expenditure. Entry and expenditure. Now, take the case of assessment year 1819. For assessment year 1819, on 1/4/2022, on 1/4, because now law is modified. Earlier it was only asset based. On 1/4/2022 by Finance Act, they have brought in expenditure and entry. So law has undergone a change again on 1/4/2022. So what is the date of change of law? 1/4/2022. On that day, you take 1819, for example. Let us say department wants to issue reassessment notice for assessment year 1819 on the basis of changed law. Can they do it? They would want to say evidence reveals that escaped income is represented in the form of expenditure. Let us say there is a huge wedding expenditure which have incurred. They would want to invoke 69C. And they would say it's an expenditure incurred in connection with an event. You have spent about 1 crore, it exceeded 50 lakh, I would want to attack you. Was that there earlier? Earlier on 1/4/21, it was not there. It was brought in with effect from 1/4/2022. Now, what was the old law? Old law is asset-based. Now, in your case for 1819, they are invoking reassessment not on the basis of asset, but on the basis of expenditure. But that has been brought in with effect from 1/4/2022. Earlier, this was not there. Yours is not a case of asset-based reassessment. Therefore, yours is a case covered by the default regime under 149(1)(a), which had only 3 years. The 3 years ended on 31st March of 2022, whereas the law is changed from 1st of April 2022. Therefore, on the date of change of law, by bringing in expenditure into the statute book, your limitation under old law had expired by 31st March of 2022. Therefore, for 1819, on the basis of an additional element of expenditure or additional element of entry in the books of account, reassessment under 149(1)(b), by extending it to 10 years, is not available. So this is how the law will have to be understood. I've just given you an example. It would be difficult to, put it in a very simple form in a webinar like this, particularly when I am not even visible to you, only my audio is there. Maybe I'll take it up a little later in the question hour if any questions do arise in this case. So therefore, in sum and substance, what I'm trying to say is that for all the assessment years 1819 and earlier, the amendment made by Finance Act of 2022, which brought in additional elements of like the expenditure, the entry, etc., would not apply. This logic would apply even when you move to the third regime. So when you move to the third regime, that is from 1/9/2024, they have relaxed this condition. But if for an earlier year, in the earlier law, it had already lapsed by 31st August of 2024, it is impermissible for revenue to apply the new law to subject your case to a reassessment. So the transition aspect is extremely important. So now with this, we'll proceed further. We are still in the second regime at the cost of repetition. So we are dealing with the law that existed from 1/4/21 till 31/8 of 2024. Now, next is the condition. One is escaped income should exceed 50 lakh and it should be represented in the form of an asset, expenditure or entry. Then it is something which the assessing officer should be in possession. He should be in possession of books of account or documents or evidence which would reveal. What do you mean by it would reveal? Not something which the assessee has disclosed. Reveal, dictionary meaning is that something which will detect, something which will find out. What assessee himself has given to the assessing officer, readily given on the platter to the assessing officer, could not be said to fall in a situation where documents in his possession would be revealing something. Revealing means assessing officer would discover, not what the assessor has disclosed. Now, the language is that the undisclosed income or escaped income is represented in the form of an asset. What do you mean by that? Should it be represented in the form of an asset at the time of issue of notice? Or should it remain as an asset at some point in time later on you would have sold an asset and, let's say, take an example where I had an unaccounted income for 16-17, about 2 crores. I used the 2 crores to acquire a site, also not disclosed. So the income was put in the form of an asset. So later on, That asset was sold in 1920. Now asset is not there. I sold the asset for 3 crores and spent it on my daughter's wedding. Today, when you would issue notice in the second regime, can you say that, look, at some point in time, it was represented in the form of an asset? It is good enough if it was existing as an asset for some time. It need not exist in the form of an asset at the time you issue the notice. The answer is in the negative. Asset has to exist at the time when you issue the notice, because 149 time limit will have to be determined at the time when the notice is sought to be issued, not at an earlier point of time. The language, the escaped income represented in the form of an asset, means it is used in a passive sense. That means the undisclosed income is represented in the form of an asset. Putting it in the active sense, the asset represents undisclosed income. So asset has to exist, not that it existed at one point in time. That would not be sufficient. Asset has to exist at the time of issue of notice. Now, the language used is an asset. So they very clearly said an asset. Whereas when it comes to entry, they've said entry or entries in the books of account. Finance Act of 2021 used the word the asset. Later on, Finance Act of 2022 substituted it with an asset. So now a question would arise as to, could I have, like more than 50 lakh of income, but spread in multiple assets, each asset not exceeding 50 lakh, is a point for debate and discussion. So it's also possible to take, though it appears a little aggressive, a view that the word an asset, in contradistinction with word entry or entries in the books of account, would indicate the intention of the legislature that the value of each asset should exceed 50 lakh. If you have multiple assets, value of each asset not exceeding 50 lakh, you possibly could take a position, depending on whether the court would agree with you or not, that your case would not come within the extended time of 10 years. No, they have not used the word represented in the form of an asset wholly or partly. So therefore, take a case where you have undisclosed income of 80 lakh, represented in the form of an asset of 40 lakh, and the 40 lakh spent out. But they have found evidence that you have had an income of 80 lakh, but presently it is represented in the form of an asset only to the extent of 40 lakh. So they have not said wholly or partly. Now, this language is almost copied from 153A fourth proviso, which also had a similar thing. You are aware that up to 31st March of 2021, all such assessments were done in terms of section 153A and 153C, where the limit was 6 years, time limit. But then they brought in fourth proviso, where they extended it from 6 years to 10 years. And they use the language. Look at the language here. The AO has in his possession books of account, other documents, evidence which reveal that the income represented in the form of asset, which has escaped assessment, amounts to or is likely to amount to 50 lakh rupees or more in the relevant assessment year, or in aggregate in the relevant assessment years. Then they say income referred to in clause A or part thereof has escaped. Look at the words part thereof has escaped assessment for such year or years. The words part thereof are conspicuously missing in the second regime. So therefore, it's immensely possible for you to argue that the asset, whole of the asset should exist, and the value of that asset as is representing escaped income should be 50 lakh or more, and wholly or partly cannot be read into it. Now, another important thing is look at the meaning of asset. Asset was defined in the second regime. It said asset shall include immovable property being land or building or both, shares and securities, loans and advances, deposits in bank. What does it mean? They have not used the phrase means and includes. They have not used the phrase includes. They have said shall include. Now look at the items that are included. Is there any doubt about it being an asset? Can anyone say immovable property is not an asset? Share is not an asset. These are very much assets, even in their very natural meaning. There is no need to call them as asset. Had they not been defined also, they would have been assets. That means when they use the word shall include and put in there those terms which are obviously assets, then the phrase shall include would mean that the asset would mean only these and none else. For example, jewelry is not an asset. Cash in hand is not an asset. They are not assets at all under the second regime. So if you are found to have escaped income represented in the form of jewelry, you will not come within 10 years time limit. You will enjoy the default time limit of 3 years only, because jewelry is not an asset. As is defined here, because shall include will have the restricted meaning. So this is supported by the decision of Supreme Court in Oswald Fats and Oils Limited, 2010 for SCC 728. And also certain other decisions, like one of the old decision of Jaram Das, Vishan Das versus Emperor, and Nasiruddin versus State of UP. And these decisions have given a restricted meaning to the word shall include. So likewise, they have, as I've said earlier, they've added expenditure by Finance Act of 2022. So any escaped income represented in the form of an expenditure. Now a question would arise as to, if an expenditure is called as bogus expenditure, let's say some expenditure of a claim, he would call it as bogus. Its value is 75 lakh. Is it permissible for them to do a reassessment by taking the benefit of extended time limit? Now, when department itself would call it as bogus expenditure, how do you say escaped income is represented in the form of an expenditure? There is no expenditure. You have, as an assessee, called it as expenditure. The department is calling it as bogus. Therefore, it would not fit in under income represented in the form of an expenditure. However, you may get caught by income represented in the form of an entry in the books of account, because you have made an entry for 75 lakh. Which entry of expenditure is now considered bogus? Escaped income is represented in the form of an entry. So this is how, though it may not fit in as part of expenditure, it could fit in as part of an entry. Now take transfer pricing cases, for example. See, if the transfer pricing adjustment results in disallowance of an expenditure, then you would be covered. Let's say you have incurred 2 crores towards a payment made to associated enterprise. Arm's length price adjustment would come to about only 25 lakh. So 1.75 crore is, according to revenue, escaped assessment, that is represented in the form of an expenditure and entry in the books of account. So it could possibly give them permission to take 10 years. However, take a case where transfer pricing adjustment results in enhancement of income. So it's a fictional income. I have billed 1 crore. They say arm's length price is 3 crores. So 2 crores is an addition that is made. Question is, can they invoke extended period of 10 years for transfer pricing addition translating into enhancement of my income? The answer is no, because it is neither represented by asset. I have not received anything. I billed only 1 crore and I received 1 crore. Escaped income of 2 crores where the addition is made is not represented in the form of an asset. Is it represented in the form of an expenditure? No, it's an income transaction. Is it represented in the form of an entry in the books of account? No, because I made entry only for 1 crore. So all the transfer pricing additions by way of enhancement of income cannot come within the meaning of either asset or expenditure or entry in the books of account. So this is how, like expenditure will have to be understood. Likewise, when it comes to entry or entries in the books of account, the question of entry or entries in the books of account would arise only if the books are maintained. Otherwise, question of entry would not arise. So only a person who is maintaining books of account will get hit by this. If you're not maintaining books of account, you have simply claimed some, there cannot be entry at all in your case. So the question of entry would not arise in your case. Now, 149(1)(a), as I've said earlier, the purpose of 149(1)(a) is to take care of those assessees who would argue that their case will not come within the extended period of 10 years by taking an argument that each year it did not exceed 50 lakh. For example, I've had undisclosed income or escaped income of 40 lakh, 40 lakh, 50 lakh. First year, I buy a site for 40 lakh. Second year, using second year's 40 lakh of income, I build the ground floor. Third year, using 40 lakh of third year income, I build the first floor. So each year it did not exceed 50 lakh. But in aggregate, it exceeded 50 lakh. And I've invested in the asset in more than 1 year. So under 149(1)(b), department would not have got the benefit of 10 years. So they wanted to address this and they brought in an amendment by insertion of 149(1)(a) by Finance Act of 2022 with effect from 1/4/2022. Here again, it's important. This amendment came in from 1/4/2022. Therefore, as I've said earlier, there is a change in law. So whenever there is a change in law, what you have to do? On the date of change in law, whether for any year, was it barred by law that existed before the change in law? So what was the law earlier? Earlier law was that each year it should exceed 50 lakh. When did the law change? From 1/4/2022. So 18, 19 and earlier assessment years, under then existing law, it was not covered. So they were coming under default regime and had only a limit of 3 years. The 3 years limit lapsed on 31st March of 2022. Therefore, the amendment of 2022 with effect from 1/4/2022 would not permit revenue to apply the new law because under old law, it had already lapsed. So this is again, I am reiterating this. This is a high fine principle that needs to be properly understood. So whenever there is any change in law, not necessarily complete substitution, some change taking place in limitation, what you have to do? Take the effective date of amendment, see whether under earlier law, the proceeding is still surviving on the date of change. If not, the matter ends there. They cannot apply the new law. For them to apply the new law, proceedings should be live and kicking as of the date of change of law under the old law. Then only you can apply new law. With this, they have brought in some provisos. Which I would not trouble you right now, except that there were 3 provisos. One is 5th proviso, other one is 6th proviso. See, you know that in the second regime, except in the case of search, either direct search on you or third party search, or a case of 135A. In all other cases, 148 notice should be preceded by 148A procedure. He should first give you a notice under 148A clause B. Then you would give reply and he has to pass an order under 148AD with the prior approval of the specified authority. Then he should issue notice under 148, and the notice under 148 should be accompanied by an order under 148 AD. Now, what fifth proviso said is, whatever time limit you would have to issue notice under 149, which is 3 years, 10 years, truncated to 6 years, all the time limit, whatever you discussed, would be extended by two aspects. One, the time that is allowed to the assessee to respond to the notice under 148A within brackets B. 7 days to 30 days or extended time allowed or extended under 148A. Then, if the notice under 148A is stayed by the court, the period of stay alone will get extended. I'll repeat again. In computing limitation, two periods will get extended. One, if there is a stay, period of stay will get extended. Two, the time that is allowed by the assessing officer to the assessee to respond to the notice under 148 AB. He has to give you not less than 7 days and up to 30 days time. Whatever time he has given you should also be extended. But further time that he may take to pass an order under 148 AD, he has time of 1 month from the end of the month in which you furnish reply. That time is not extended. So the time taken by the AO to pass an order under 148A is not excluded. Only the time allowed to assessee to respond will be excluded. This is an important point that needs to be noted carefully. Then sixth proviso would say, if after the exclusion of the time, the remaining time available is less than 7 days, it will be topped up to 7 days. Let's say remaining time limit is 5 days. Then you'll get additional 2 more days. Remaining time limit is 2 days. You'll get additional 5 days. Remaining time limit is 1 day. You'll get additional 6 days. What if there is no remaining time limit at all? Like, for example, last day he will initiate 148A. When he does it on the last day, whether that last day will mean 1 day and he will get another 6 days, whether 0 also will be called as remaining period, is open to debate. If you would apply Section 9 of the General Clauses Act, what it says is, whenever the period is explained as from so-and-so to so-and-so day, the from date is excluded, to date is included. Like if they would say from 1st of April till 10th of April, 1st of April get excluded for all the purposes of the General Clauses Act in interpretation of the central laws. So if you have to understand that, if you had initiated 148A itself on the last day, remaining time period will be 0 because last day will have to be not reckoned at all. Then the extension by 7 days may not apply. Again, it's open to debate. So we'll have to see how it works. Now, before I move on to the decision of Ashish Agarwal and Rajiv Bansal, let's understand the transition aspect. See, the major change took place by Finance Act of 2021. In some cases, notices have been issued before 31st March 2021. Proceedings are still on after the change of law. That is one aspect. Another aspect is notices are issued on or after 1st of April 2021. It's fairly clear. Any notice issued on or after 1/4/2021, Ashish Agarwal, Rajiv Bansal, all courts, all case laws have said that new law should be applied. Now, look at notices issued prior to 31/3/2021. But assessment is still open as of change of law, 1/4/2020. What is the fate of those notices? How will they proceed to do reassessment? Are they permitted to do reassessment or not? Now, extremely important point. that needs to be noted is when they brought in new law by Finance Act of 2021, they have not saved the notices issued in the past. There is no saving clause. What do you mean by saving clause? They should have said that, look, a notice issued on or before 31/3/2021, pending as of 1/4/2021, assessment or reassessment should be carried out under the law that then existing. Like, for example, if you look at the Finance Act of 2024 amendment, they have brought in 152 subsection 4. I will read this. This is how they should have enacted even then, but they did not do it. Look at how they took care of it in Finance Act of 2024. Subsection 4 of 152, I will read it out for your benefit. Because law again underwent a change with effect from 1/9/2024. So they wanted to address a situation where notices were issued on or before 31st of August of 2024, before the law underwent a change, but are pending as of 1/9/2024. So the reassessment should be made in respect thereof. The language is this: where in a case a notice under 148 has been issued or an order under 148 AD has been passed prior to the first day of September 2024, the assessment, reassessment, or recomputation in such case shall be governed as per the provisions of section 147 to 151 as they stood immediately before the commencement of Finance Act of 2024. This is how they should be doing. But strangely, this kind of a saving is not done for notices issued on or before 31st March of 2021, which are pending as of 1/4/2021. Now the question is, what is the fate of those notices? Should those notices die? Ashish Agarwal says new provisions would apply only to notices issued on or after 1/4/2021. However, Ashish Agarwal dealt with only notices issued on or after 1/4/2021. A case of a notice issued prior to 1/4/2021 was not before Ashish Agarwal or Rajiv Bansal. So therefore, the observation made by the Supreme Court in Ashish Agarwal that the new law would apply only if the notice is issued on or after 1/4/2021 is an obiter. It is without a discussion. It is without a case on hand, and therefore should not be treated as a ratio decidandi. Now, if the intention of the law is to keep the old provisions alive, they should have made a provision similar to 152 subsection 4, which just now I have read out. That was not there. Now, you may ask me a question: why would you say the old notices die? I would want to say that the old notices do not survive because old notice was issued on the basis of a foundational requirement of then existing 147, that is reason to believe. Now look at the new law under 147. There is no phrase called reason to believe. So the notice issued on the basis of reason to believe, where that foundational requirement of reason to believe, which was then existing under 147, but now no more existing under new 147, where is the foundational requirement now existing? So the notice based on non-existing requirement, non-existing foundation, will not be a notice valid under new law. So he has to proceed under new law. If you look at new law under 147, it says subject to provisions of 148A. So therefore, all the notices, though validly issued under old law on the basis of reason to believe, up to 31st March of 2021 would lapse because of non-existence of a saving clause similar to 152.4, which have smartly brought when they amended it by Finance Act of 2024. So, we are in the various high courts. We have filed a fleet of writ petitions on this. The courts are yet to take these matters. Right now, we don't have a decision available. So this is an important point that needs to be taken note of. Now let's come to Deepak. How much time do I have? Can I now move on to Raju Bansal and Ashish Agarwal?
Sure, sir. Your call, sir. No time constraint as such, sir, in the online.
We are supposed to end at 7. So we
We can.
started a little late, so we can take.
Yes, sir.
No. See what happened in the Ashish Agarwal. So you should know this background for us to understand the implication of Raju Bansal also. See, in Ashish Agarwal, rightly or wrongly, it was presented to Supreme Court that department issued some 90,000 notices. It was blown out to convey to Supreme Court that huge number of litigation would land up in your door. You have to handle it in some manner or the other. So Supreme Court was put a scare. Look, there are 9,000 High Court decisions which are filed against department. We'll be filing 9,000 SLPs before the Supreme Court. Likewise, we've issued 90,000 notices. Supreme Court was virtually put to a scare by the revenue. So they argue that from 1/4/2021 till 30th June 2021, for 3 months, where the due date otherwise lapsed on 31st March of 2021 or during TOLA period, because of TOLA extension, we kept on issuing notices during the period of 3 months, from 1st of April 2021 till 30th June of 2021, because TOLA notifications read with the TOLA Act extended for all the reassessment notices which fell due from 20th of March of 2020 till 31st of March of 2021, wherever the due date fell from 20th March of 2020 till 31st March of 2021, the due date stood extended up to 30th of June of 2021. So what department said? We had 90,000 notices where the due date actually fell during this window. We took the benefit of TOLA and issued notices from 1st of April 2021 till 30th June of 2021. However, by mistake, we applied the old law. We did not follow a procedure of 148A. By mistake, we issued 148 notice directly without following the law that underwent a change from 1/4/2021. So all the high courts quashed these notices saying, hey, this is a procedural law. This law is effective from 1st of April 2021. Your notice directly issued under 148 is bad. Non-est void ab initio, and they quashed the notices. So when the matter went to Supreme Court exercised its extraordinary jurisdiction in terms of Article 142 of the Constitution to say, to meet the ends of justice, to, in the scheme of equity, to sideline the law, but equity being more important than law is one of the criterion for invocation of Article 142. What Supreme Court did is, look, we'll do a via media. All the notices which are issued under 148 are now deemed to be notices under 148A within brackets B. With the Supreme Court said so in its decision on 4th of May 2022. So what did Supreme Court do? All the notices wrongly issued under 147 from 1/4/2021 till 30th June of 2021, those 3 months window, Supreme Court deemed those notices to be notices under 148A within brackets B. And then what Supreme Court said is, look, now that I have said it has a notice under 148 AB, department guys go and give the information to the assessee within 30 days. And Supreme Court said, assessees, you will have 2 weeks time to respond. So department followed it. They issued an instruction 1 of 2022. They understood Supreme Court decision in a manner where it even extended time limit. But Supreme Court very clearly stated all the defenses available to you, including the limitation of time under 149, are available to you. They are kept intact. Having said that, Supreme Court said, look, all the notices wrongly issued under 148 shall now be deemed to be notices under 148A within brackets B. Within 30 days from my decision, give information to the assessees. Once you give the information to the assessees will have 2 weeks time to respond. You hear them, pass an order under 148 AD, then issue a fresh notice under 148, but limitation will have to be respected. Is all what the Supreme Court said. Now, following Supreme Court decision, department issued one instruction 1 of 2022, wherein they said they brought in a funny rule of travel back theory. They said, look, Supreme Court called my earlier notice under 148 as a notice under 148 AB. So now if I follow Supreme Court's order and issue a proper notice under 148, that notice will date back to my original notice under 148 and limitation is therefore taken care of. This is what the department said. Department also said that the approval requirement under 151, which said that approving authority will change depending on how many years have elapsed. If 3 years or less have elapsed from the end of the relevant assessment year, the commission or the principal commission. If more than 3 years have elapsed from the end of the relevant assessment, the approving authority is the chief commissioner, the principal chief commissioner. So department said that we will have to see when 148A, the deemed notice of 148A was issued, at that time, if it is less than 3 years, the commissioner or the principal commissioner. At that time, it is more than 3 years, the principal chief commissioner, the chief commissioner. So the department had its own funny understanding of Supreme Court decision. Supreme Court had never said any of that. So department issued fresh notices under 148. These notices were issued during July, August, and September 2022. Assessees again challenged it in various high courts. Rajiv Bansal in Allahabad High Court, Kinara in UP High Court, Hexaware in Bombay High Court. All the high courts, they challenged it on the basis that the notices issued second time during July, August, September 2022 are all time barred. Supreme Court very clearly in Ashish Agrawal stated that the limitation of time is a defense available. It did not extend the limitation. So all high courts unanimously held in favor of the assessees, saying that department's instruction of 1 of 2022 of travel back theory is wrong. Time limitation is to be seen for issue of proper notice under 148. Time limitation cannot be seen with reference to wrongly issued notice under 148, which was deemed to be 148 AB by Supreme Court. That is not the time limit. Time limit under 149 is not for 148 AB. Time limit under 149 is for issue of notice under 148. All the high court said so. Department goes to Supreme Court again. And Supreme Court gives relief to department. See, the funniest part is, each time department makes its own set of mistakes, and it will go to Supreme Court and cry like an errant baby, erring baby. Oh, I made this mistake, kindly protect me. And Supreme Court will protect. Department will come back like a baby and make the same mistake again and go back to Supreme Court. So this is the second time it is going to the Supreme Court, well, for the very same set of notices. Now matter goes to Rajiv Bansal in Supreme Court, and Supreme Court considers two questions: whether TOLA and the notifications issued would apply to reassessment notices issued after 1st of April 2021. Whether reassessment notices issued under Section 148 between July, August, September 2022 are valid, because the department now went to Supreme Court in Rajiv Bansal and argued that the TOLA 2020 applied 149 brought in its new form with effect from 1/4/2021, meaning the argument of the department is older TOLA had an overriding effect on a newer act. See, TOLA overrode even an act, that is Finance Act of 2021, that came later. What high courts have said is TOLA did not affect new 149 at all. TOLA only applied to old law. Old law itself got completely substituted by new law. So 1/4/2021, you have complete new dispensation available, which did not save anything under the old law, including TOLA. So TOLA cannot apply to new law, was assessee's argument, accepted by all the high courts. So this is the first question which the Supreme Court took. So department argued in Rajiv Bansal, saying that TOLA would even apply to new notification. I mean, the new law, TOLA and its notifications would apply to even reassessment notices issued under new law, effective 1st of April 2021. And they wanted to argue that Ashish Agarwal, when it deemed wrongly issued notice under 148 as notices deemed to be issued under 148 AB, it was an implicit stay granted by the Supreme Court, is what the argument of the revenue. And therefore, the entire period from the date of issue of notice under old law till the decision of the Supreme Court, 30 days time granted to the department to give information, and 2 more weeks time granted to assessee, all these should be treated as extended, is how the department wanted to argue. Now, on this basis, Supreme Court deals with the issues. Now, scope of Supreme Court decision will have to be carefully delineated. It cannot be applied to all cases of time limit. The scope of Supreme Court decision in Rajiv Bansal should be understood only in respect of reassessment notices issued between 1/4/2021 till 30th June 2021, about 90,000 notices. One. Rajiv Bansal's decision would apply only to the extent of whether TOLA and its notifications would apply to new law. And what are the time limits for sanction under 151? Who is the authority to sanction it? Now, revenue will concede, extremely important point. Revenue will concede that. So these are the years involved: 13-14, 14-15, 15-16, 16-17, 17-18. 5 assessment years are involved in Rajiv Bansal. So why I'm saying all this is, Rajiv Bansal's decision, its ratio, its principles would apply in a very, very limited environment. That is transition from first regime to second regime. Notices issued from 1st of April 2021 till 30th of June of 2021. It would not apply to ongoing reassessment notices. It would not apply to interpretation of 149 for any other notice other than coming within the scheme of these years. That's all its limitation is. So limited scope of Raju Bansal has to be first very clearly delineated. Now, what did revenue argue? Revenue's argument is the new law, which is applicable from 1st of April 2020, new limitation. What is the new limitation? 3 years or 10 years. But those 10 years will stand reduced to 6 years for assessment years up to 21-22. Now, assessment years involved are 13-14 till 17-18. So all are assessment years prior to 21-22. So it's 3 years or 6 years. Now, it gave a table. It gave a table. If you follow 3 years, that is default regime, 13-14, it left on 31-3-2017. But if you apply 6 years, it lapsed on 31-3-2020. Look at this carefully. If your case will come under 149(1)(a), it is 3 years. If a case will come under 149(1)(b), it is 6 years. Now, each year, revenue dealt with. It took the first year, 13-14. If it is coming under 149(1)(a) default regime, what is the limitation? Only 3 years. So 3 years is gone, long back on 31st March 2017. And department agrees it cannot be reopened. However, if the case is reopened under 149(1)(b), that is, income escaping assessment represented in the form of an asset exceeding 50 lakh, then you will have a time of 6 years. 6 years will end on, look at the table here, column 4, 31-3-2020. That came within the TOLA period, because TOLA period is from 20th of March of 2020 till 31st of March of 2021. It came within TOLA period, so due date got extended up to 30th 6 of 2021. Similarly, go to next year, 14-15. If it is a case of default 3 years, it lapses on 31-3-2018. But if it is a case of 149(1)(b), 6 years time, it will end on 31st March of 2021, which will also fall within the TOLA period. So time gets extended up to 30th 6 of 2021. Then if you go to 15-16, interestingly, 3 years, 31-3-2019, TOLA is not applicable. 6 years, 31-3-2022, TOLA is not applicable, because for TOLA to apply, it has to be from 20th March of 2020 till 31st March of 2021. Whereas here the due date fell on 31st March of 2022. TOLA is not applicable. Similarly, 16-17, if 3 years is applied, TOLA would apply, because it will come on 31-3-2020. So it gets extended to 30th 6 of 2021. If 6 years is applied, TOLA is not applicable. Take 17-18. If 3 years is applied, TOLA would apply, because it will end on 31st March of 2021. If 6 years is applied, 31st March of 2024, TOLA would not apply. What the department is trying to do here by giving this kind of a table? What department is trying to do is, after Ashish Agrawal decision, I issued notices in July, August, September 2022, after complying with decision of the Supreme Court. When did I issue notices? July, August, and September 2022. Now, what it argued is, when it comes to 13-14, when it's a case of 6 years, I get the benefit of TOLA. I will also get the benefit of deemed stay by Supreme Court. Therefore, the notice which I issued in July, August, September 2022 is valid. Similarly, when it comes to 14-15, where it is a case of 6 years, it will again come under TOLA, deemed stay by Supreme Court, notices issued by me are valid. When it came to 15-16, the department said, if it is 3 years lapsed, 6 years, lapsed on 31/3/2022. TOLA is not applicable. Now issued notices in July, August, September. Hence it is time barred. July, August, September 2022. So revenue conceded that they cannot take any action for assessment year 15-16. Now, interestingly, they argue for 16-17 and 17-18 that if it would be a case of 3 years, it will get covered by TOLA. I'll get the benefit of TOLA. I'll get the benefit of deemed stay because of Ashish Agarwal case. So my notices issued in July, August, September 2022 are valid. If it is not a case of 149(1)(a), if it is a case of 149(1)(b), then they would argue, I have enough and more time limit of 6 years that will end on 31/3/2023 or 31/3/2024, whereas I've issued notices in 2022 itself, they are valid. So this is the argument of the revenue in the Supreme Court. Now, and revenue would also argue that without application of TOLA, all their notices which they've issued during these many years would lapse. So revenue concedes you have to dole out TOLA benefit to me under new law. If you don't give me TOLA benefit under new law, revenue conceded, they're all time bar. Now, what Supreme Court does, Supreme Court gives various, like discourses, what is assessment, how the law should be understood, all that it does in good 20-25 pages. Then it will go on to some decision of one CTO versus Vishwanath Junjunwala case, which dealt with limitation. But Supreme Court wrongly dealt with this case because in CTO versus Vishwanath Junjunwala, if you read the decision carefully, it was a case of limitation law being amended retrospectively. In income tax in 149, there was no retrospective amendment. So the decision which the Supreme Court relied on in CTO versus Vishwanath Junjunwala dealt with a case where there was a retrospective amendment. In fact, in paragraph 10, they have said that when the legislature does a retrospective amendment, we will only see, to that extent, we will not see greater retrospectivity than what was expressly stated by the legislature. In fact, this decision is in favor of the SSC, which was completely misconstrued by the Honorable Supreme Court, with due respect to it in Rajiv Bansal, to say that no, limitation has to be read as a procedural provision. It has to be read in order to ensure that the charging section stays. They left out what Constitution Bench said in Calcutta discount. They left out what KM Sharma said, that the limitation has to be construed strictly. They rather made a liberal interpretation of limitation to give candy to revenue. They've given a candy to revenue. They have told the revenue, keep chewing this candy. Each time, come to me, I'll give you a new candy. Very unfortunate decision. So now, they look at what they have gone on to say. They have said a few more things. First thing they have said is that the new law would apply, which they agreed rightly. New law would apply for all the notices issued on or after 1/4/2021. They have agreed on that. Secondly, they have said that though the new law in case of 50 lakh plus gave 10 years time, they understood first proviso as truncating it to 6 years. That also, they have said that. To that extent, they are absolutely fine. But when it comes to TOLA, Supreme Court said that, look, TOLA would apply to new law. New law came much after TOLA. TOLA is 2020. New law is Finance Act of 2021. Without any basis, without any legal jurisprudence. Simply, Supreme Court said that TOLA overrode even the new act. So meaning the new time limit brought in by Finance Act of 2021 with effect from 1/4/2021 would be tempered by TOLA time limit. So extension of time granted by TOLA, read with the notifications, would apply to the new time limit of 3 years also. So that they give an example. Like, for example, they say, take this example in this slide. For instance, Section 149 1A of the new regime specified time limit of 3 years from the end of the relevant assessment year. Then they take 1718. For 1718, they say time limit expired on 31st March of 2021. They say this time limit fell under TOLA time range. The expiry of time fell within the time period contemplated by Section 3 of TOLA. Resultantly, revenue had time up to 30th June of 2021. So they, for strange reasons, they applied TOLA. Look at the TOLA Act. It dealt with a period even prior to new law coming into being. It dealt originally with 20th of March till 31st of December of 2020. That's all it dealt with when the TOLA Act came. Then a couple of notifications were issued. One notification extended it from 31st of December 2020 till 30th of March. Another notification extended it up to 31st of March. So TOLA Act read with two notifications defined the scope from 20th of March of 2020 till 31st of March of 2021. If the due date fell within this range, then it will get extended. So by natural understanding, TOLA applied to old law. It applied to old law. It did not even reckon the limit of time brought in by Finance Act of 2021 in its mind. So once the new act came, in the Finance Act of 2021, which completely substituted old 149 without a saving clause. There is no saving clause. There is completely no saving clause. The question of application of old TOLA to newly substituted 2021 is beyond, beyond, the principle of jurisprudence. But Supreme Court has said so. When Supreme Court says, because it is supreme, what it says is final. Now, Supreme Court has said that the TOLA would apply to new law. Not only that, they have said the TOLA would also apply to the first proviso to 149 1B, which truncated the time limit of 10 years to 6 years. So if 6 years due date would fall within the TOLA period, even for that, the time limit will get extended up to 30th of June of 2021. This is what Supreme Court said. My humble view, with due respect to the Honorable Supreme Court, is this is not the principle which Gadgil's case, KM Sharma's case, etc. said. The principle which Gadgil's case, if applied in the TOLA context, is when there's a change of law as of 1st of April 2021, you apply the old law with TOLA to see whether proceeding is surviving on the date of change of law. If it is not surviving, the matter ends. If it is surviving, forget all that, apply just the new law, is what the Supreme Court had been saying. But unfortunately, in this case, Supreme Court applied an old law to override the new law. This is number one. Number two, When it came to 151, Supreme Court, with due respect, took a very strange stand with too many contradictions. With too many contradictions by the Supreme Court. Look at what they speak on 151. So what does 151 deal with? It says 3 years or less, the commissioner or the principal commissioner. More than 3 years, chief commissioner, the principal chief commissioner. Now, that has to be seen at the time when that person grants the sanction. There is no time limit for grant of sanction. The requirement of law is prior approval, that's all. Time limit is not there for sanction, please understand. Time limit is there only for issue of notice with a condition that there has to be a prior approval. Now, in this context, whether 151 had a time limit or not, Supreme Court makes contradictory statement. Look at para 74. It says, the specified authority is directly correlated to the time when the notice is issued, which is wrong, which is completely wrong. 151 time limit of 3 years or more than 3 years is not a time limit for carrying out a function. It is more a time limit for who should carry out the function, whether it is commissioner or the principal commissioner, or chief commissioner or the principal chief commissioner. Which Supreme Court agrees in the next para. Look at the change, look at the U-turn it does. In para 76, it says, look at the highlighted portion here. 151 does not prescribe a time limit within which specified authority has to grant sanction. Rather, it links up the time limits with the jurisdiction of the authority to grant sanction. This is correctly understood. It doesn't give a time limit. It says who should do. But then having said so, in para 77, it does another U-turn. Look at the highlighted portion. TOLA will accordingly extend the time limit for grant of sanction. First of all, 151 is not a section dealing with time limit, with the acknowledged in para 76. I will repeat it. Go back to para 76. Look at second para which are reproduced here. Section 151 of the new regime does not prescribe a time limit within which a specified authority has to grant sanction. Rather, it links up the time limits with the jurisdiction of the authority to grant sanction. Having said that, in para 77, highlighted portion, it says, TOLA will accordingly extend the time limit for grant of sanction. When there's no time limit for grant of sanction, where is the question of TOLA extending it? See, look at such a glaring contradiction in a decision by a bench of 3 honorable judges. Very next para, they do a U-turn. So this is the most unfortunate part. And therefore, what Supreme Court says is, the TOLA extension will not only be available for issue of notice, TOLA extension will also be available for grant of sanction. And they give an example. Look at this example. Take 1718, for example. 3 years will fall when 31st March 2021. Because of TOLA, time limit is extended to 30th June of 2021. Let us say sanctioning authority will sanction it on 29th of June of 2021. So 29th of June of 2021, when reckoned for assessment year 1718, is more than 3 years. If it is more than 3 years, which clause would apply? 151 clause 2 would apply. That is chief commissioner, the principal chief commissioner. Whereas Supreme Court says, though more than 3 years have elapsed, TOLA should be ready. Therefore, authority to grant sanction would be just the commissioner or the principal commissioner under clause 1 of 151. This again is a completely incorrect understanding of law. Not only that, it contradicts what Supreme Court has stated in para 76. The contradictions galore there. Then one more aspect of, I think Deepak, it's already 7.
7:15, sir.
Yeah. So it would not be proper to keep going on like this. So you have to fix a time. We'll close by then. Maybe take a couple of questions and wind up. What do you suggest?
7:30, sir.
So 7:30 is when we should call it quits. So I will go quickly another 5 minutes
Sure, sir.
because I don't think there is time to discuss new law now. Third regime, I don't think we have time to discuss. So we'll just quickly wrap up the Raju Bansal's decision and then I'll start taking questions.
Sure, sir.
Now, having said that TOLA would apply, Supreme Court did not deal with situation of proper notices issued in July, August, September 2022 after complying with Ashish Agarwal. Who should grant sanction? They are not dealt with. As I said earlier, Department in Instruction 1 of 2022 said whether 3 years have lapsed or not to decide whether it is commissioner or the principal commissioner or the chief commissioner or the principal chief commissioner. You go back to wrongly issued notice under 148, which is deemed to be a notice under 148 AB. If as of that day 3 years have not lapsed, commissioner or the principal commissioner, if as of that day 3 years have lapsed, the chief commissioner, the principal chief commissioner is what the instruction 1 of 2022 said. Supreme Court has not dealt with that portion of it. So therefore, the travel back theory of 151 to erstwhile notice under 148, which is deemed to be a notice under 148 AB, may not have received imprimatur by the Supreme Court. Now, the other bombshell issued by the Supreme Court is this. See, what did Ashish Agarwal say? Ashish Agarwal decision was given on 4th of May of 2022. And what it told, it asked the department to first it deemed the notice under 148 wrongly issued as notice under 148 AB. Then it told the department, hey, go give within 30 days information to assessee. It gave 2 weeks time to assessee to respond. Then it told the department, do it properly within the limitation of time. So on that basis, department went and issued notices during the period of July, August, September 2022 after complying with Ashish Agarwal. Assessees argued, as I've said earlier, in all the high courts that it's all time bar. Maximum time available was 30th June 2021. There was no stay. If at all there was some stay, it was granted by some high courts. But once the Supreme Court has decided there was no stay, therefore, question of extension would not apply. But Rajiv Bansal, Supreme Court said something else. What it said is, it understood Ashish Agarwal saying that once Ashish Agarwal deemed wrongly issued notice under 148 as 148 AB, this notice was issued way back from 1st of April 2021 till 30th June 2021, about 90,000 notices were wrongly issued. All these 90,000 notices which are wrongly issued under 148 were deemed to be notices under 148 AB by Supreme Court. Right. Now, Rajiv Bansal says, by deeming it to be notice under 148 AB, Supreme Court implicitly stayed the operation. It stayed the proceeding under 148 AB. So what Rajiv Bansal said is, from the time the wrong notice was issued till the date of decision of Supreme Court, that is on 4th of May 2022, there was a stay by necessary implication, which is completely not something which any jurisprudence would say so. So, till 4th May 2022, there is an implicit stay, and they don't stop there. Supreme Court says, Ashish Agarwal gave 30 days to department to give information. So stay will extend by another 30 days. Then Supreme Court says Ashish Agarwal gave assessees 2 weeks time to respond. So stay will extend by another 2 weeks. So according to Supreme Court, in Rajiv Bansal, there is a stay granted by Supreme Court for 148 AB proceeding from the time the notice was wrongly issued till 4th May 2022, when Supreme Court decides in Ashish Agarwal, another 30 days, another 2 weeks. So it will go till then. So there is a stay till then. That means the period from the date of issue of wrong notice till 4th May, another 30 days, another 2 weeks, will all get excluded. The time will have to be added to the limitation period. This was looking very bizarre. So, having said that, then Supreme Court dealt with a new concept called surviving period. So it wanted to do a balance. So nothing is coming from law here. So this is a classic case where when Supreme Court decided Rajiv Bansal, it kept the law, told the law, you be there, I'll decide what the law is. It's a classic case of court making law, leaving out law. There is a clear law, apply the law is the job of the court. Here is a case where the court keeps the law in the cold storage and brings out its own interpretation. Now, once they said that there is a deemed stay, they felt it little bizarre. So they wanted to balance it out. So they brought in a new concept of surviving period. What according to them is surviving period? They say all these notices, because of TOLA, they had time only up to 30th June 2021. Now, whenever they issued notice, the wrong notice, let us say they issued notice on 1st of June 2021. Right? Under TOLA, they had time up to 30th June of 2021. So 30 days time is the surviving period. The 30 days time will be added. After the stay will end. When will stay end? The deemed stay, when will it end? It will end on 4th May plus 30 days plus 2 weeks. Let us compute it. 4th May, add 30 days. 3rd June, add 2 weeks, that is 14 days. 17th June. So 18th June, stay will end. Now, to the 18th June, surviving period should be added, is what Supreme Court said. What is the surviving period according to Supreme Court? The wrong notice when it was issued, take an example that it was issued on 1st of June. How much time they had under TOLA? 30th June. How many more days left? 30 days would be left. The 30 days should be added to 18th June, which will make it 17th July. So by 17th July, according to Supreme Court, they should have issued notice. Now, what is the implication of this? Many notices, of 90,000 notices, many of these notices were issued at the fag end. Some of these notices are issued on 25th June, 30th June of 2021. So if the notice is issued on 30th June of 2021, what is the surviving period? 0. If the notice is issued on 25th of June, what is the surviving period? 5 days. Most of these 90,000 notices were issued at the fag end of the TOLA period. So all those will have very less surviving period, which will all get added to 18th June. So I have a few cases where original notices were wrongly issued on 30th of June of 2021. Surviving period is 0. So 18th June, it will lapse according to Supreme Court. Because Supreme Court decision on 4th May 2022, 30 days will 3rd June 2022, another 2 weeks will make it 17th June 2022. On 18th June 2022, it will lapse. There is no surviving period available. So in sum and substance, the effect of what Supreme Court did is that more are the notices closer towards 30th June of 2021, less are the chances of those notices surviving now, because surviving period will be less and less. So what is the surviving period? From 1/4/2021 till 30th June 2021, whenever the wrong notice was issued, from the date of notice till 30th June is the surviving period. So if the department had prudently issued notices in the earlier part of the window, they get longer surviving period. If the department sat on it till the end and issued the notices wrongly at the latter part of the window, they will get lesser surviving period. This is the sum and substance of what Supreme Court said. Now there is another set of writ petition that will now go to Supreme Court. So now department will go like a baby to the Supreme Court for the third time for the third candy. Then we'll have to see what the Supreme Court will have to say. There are so many other things to discuss here, but we have already overshot the time by good half an hour. I would take a couple of questions now, and then we can wind up. And before that, I would sincerely thank KSCAA for giving this unique opportunity. I would appreciate the limitation. One is this is a webinar. Two, I'm not visible for some technical problem. And three, this is a highly complex topic which needs to be discussed in a physical meeting, so that you could understand this a little better. Yeah. With this, till the time the chairman permits, the questions could be raised.
There are a bunch of questions in the Q&A box. So with your permission, I'll just take two of them. Uh, One is on cash deposit. So there is cash deposit during demonetization period, that is assessment year 17-18. The query is, can it be taken up under the second regime?
See, when the cash is deposited in the bank, correct?
Yes, sir.
Let us say your unexplained income or escaped income is deposited in the bank, correct? Now, if you look at 149 explanation, asset is defined to include immovable property, being land or building or both, shares and securities, loans and advances, deposits in bank account. Now, the answer is found here itself. Demonetization cash put in the bank, if unexplained, if represents escaped income, that is represented in the form of an asset, which is deposit in bank account. If that were to exceed 50 lakh, under the second regime, department will get the benefit of 6 years. Yes.
The extension to this question is that the cash does not stay deposited, but in turn is used to make purchases and other expenses. So the cash of more than 50 lakh does not stay in the bank account. So will it still count as an
It should
as a,
be at the time when the notice under 148 is issued, there should be deposit in the bank account.
if it is deposited and subsequently utilized, drained out of the bank, then
Then it is not an asset. It was deposited, withdrawn, spent. It is not anymore being represented in the form of a deposit. See, this is what I gave an example.
yes,
That I had undisclosed income of 2 crores in 15-16. I invested that in a building in 16-17. In 17-18, I sold it for 4 crores and spent on my daughter's wedding. This is the example I gave.
yes, sir.
Can it be said to be represented in the form of an asset being an immobile property? At one point in time, it was there in the asset. Now it is no more an asset. 149 has to be seen at the time of issue of notice.
Noted,
So
sir.
at that time, if it is not in the bank deposit, department will not get the benefit of extended window of 6 years. They can do within 3 years. They can't take 6 years time.
Uh, Final question, sir, with your permission. If the
Right.
assessee has participated in time bar proceedings and the assessment, can he later at appellate stage argue this as a point of law?
Definitely, because The legal maxim is there is no estoppel against law. Limitation is not decided by agreement and acquiescence. Limitation is dictated by law. Participation in a proceeding wrongly initiated will not stop the assessee from taking defense of law. Maruti Suzuki 416 ITR 613 Supreme Court decision authored by Justice Chandrachud says acquiescence participation would not act as an estoppel. You can raise this limitation of time at all forums, including in a writ petition, though you have participated. See, most of the writ petitions on time limits, assessee participated. He participated without prejudice to his limit, defense of time limitation. Even in Rajiv Bansal, all the matters which went to Supreme Court, there were participations by the assessee. If you can take it up in writ, you can as well take it up in appeal also.
Noted, sir.
Yes.
So, with the permission, we conclude today's session, sir. And as we conclude today's enlightening session, I would like to extend our heartfelt thanks to Chythanya sir for sharing his profound insights into the complexities of reassessment provisions. Sir, your expertise and clarity have truly enriched our understanding of the reassessment provisions. Thank you once again, and we look forward to continued participation in future programs also. Thank you, participants, for your very patient hearing. Thank you all. The session stands formally concluded. Thank you.